Right, well, g'day there, everybody. Thanks a lot for joining me on this Monday afternoon market recap. There is approximately 1 hour or so left in today's session, so this candlestick that we are looking at on the S&P 500, it is subject to change. However, I do believe that the meaning of today's session, it is very clear, it is very apparent. It is the first time, really, if you go back and have a look at this, since this particular candlestick over here, whereby we have seen the S&P 500 down to the degree at which it currently stands. At the moment, it's down 21 points. You have to go all the way back to the 8th of October to get a similar type of candlestick. In fact, you almost need to go all the way back to the 2nd of October to see this type of pullback that we just simply haven't experienced since. Really, since that first candlestick or this candlestick over here, the markets themselves, they have been on an absolute rip, an absolute tear to the upside. So this really shouldn't be all that surprising to anyone who can objectively look at markets and say, well, potentially, this is the first sort of apex that we are sort of digesting in the market since the breakout in the period of October. Let me just explain this a little bit further to you. I don't want anyone to be concerned. I don't want anyone in this particular public forum to think that this is some form of a macro top on the markets whatsoever. In fact, what we've simply done on the S&P 500, very similar to this candlestick just over here, this is going back to the 20th of November, is that since we established the gap between that of the 22nd, which was Friday, and Monday being the 25th of November, what we've done is we accelerated away out of that gap. We've obviously seen the handbrake be pulled on the market on Friday. That was on very low volume. The market was closed a little bit earlier than normal on Friday, just gone. And as such, today on Monday, we have seen a continued pullback. I'm assuming this is going to be on elevated volume. I don't have the end of day volume print, as I said. There is just over an hour left in today's session. But what is very clear is that we've sold on back down, right? We've closed this most recent open window, very similar to, again, what we did over here. This is the 14th of November, whereby we closed it on the 20th over here. And as such, you should expect the markets themselves to essentially base around this current sell-off area. You can see on my screen, we're holding at 3,119 points. You can sort of extend this down to say 3,100. It's something that we've spoken about in the past, i.e. that being a psychological round number. But as such, really what we're doing is that although we're pulling back and we have sort of broken out of that hypothetical potential of a bull flag continuation, very similar to what we were talking about over here, that sort of breaks down in and of itself during today's session or upon itself. Really what you need to be focused on, again, are these rising exponential moving averages. Considering this sell-off that we have seen so far, again, at the moment, it's sort of holding around 0.75% in terms of the point sort of sell-off at the moment. When it comes to the NASDAQ, it's sitting at more so over 1%. But when you think about it, really all we've done is we've sold off back down into the 10 rising exponential moving average. We haven't actually even, at this particular point as I sit down and bring you this recording, come on back down to even the rising 20 exponential moving average. So again, what it appears to be happening is that, one, we've closed the window, which is fantastic. This makes us happy because now that it's done, we no longer need to do that in the future. We're also allowing these oscillators to reset a little bit. More noticeably is that of the RSI. Again, we can sort of linger up here like we did. We tried to turn down in the late stage of November, but what happened was when we saw the continuation out of the bull flag, the oscillators somewhat, immaterially pushed on back up and held into overbought settings. The RSI is now definitively, as I just mentioned, moved out of oversold. But what's more critical at the moment, and I really want you to understand this, is that we alluded to this over the weekend with the potential of the ADX making that sort of second lower high in terms of its most recent peak. Yes, we did allow the ADX to reset. It reset only for a couple of sessions before it turned up once again. Now, during Friday and also continuing into today's session, now that we have seen what appears to be that secondary double top on the ADX, it makes sense that the market is going to move into a period of digestion. Digestion being that of the most recent gains, the breakout that we have seen in the market since that late period in the month of October. So although we're not looking for a larger, deeper correction at this particular point, do not be surprised if the markets themselves move sideways, or at least they consolidate in a sideways manner. We might get a really tight little range, which again isn't really all that tradable in terms of buying off the EMAs and then potentially selling at ranges. That is, pardon me, not the way to be breaking down this market. What you need to be sort of focused on, or at least be mentally prepared for, is a period of time whereby the markets themselves struggle to push on up into 3,175. This is the target that we've been speaking about on the S&P 500. I still think that we're going to get here before we see that of a deeper correction, whereby that would establish that next major sort of higher low in terms of the larger and more broader bull market continuation. but you need to think about the market itself getting stuck in the sand a little bit as we allow the ADX, if it chooses to really definitively reset back down to this resting 20 period on my screen. The CCI, you can see that it's starting to adjust. It is still very much still trending at above 100. It's printing over here at 132. But this may be, and it's really the first clearest indication, the first clearest signal that the market is changing from that of a series of sort of daily sessions of just continuing gains, right, where we continue to print fresh new all-time highs, into a period of, we just need to take a little bit of a breather. We need to compose ourselves and lay the foundation for that next subsequent break above the range to take us up very much so higher above 3,175 on the S&P 500. I'm not looking at this market at the moment as a major sort of market reversal. Again, just to repeat myself, what we have done is we have closed the open window stemming from Friday of 2 weeks ago back to Monday of last week, being the 25th, the final week of trading in the calendar month of November 2019. We've closed this open window. We'll see whether or not we get a reaction this week. But again, if you wanted to print screen anything, or if you wanted to take notes, this is what you should be focused about. A little bit of a sort of very tight channel, more so that of a stair-step consolidation, allowing the 50 and the 20 to come on back up and to actually hold price, to support price, which will then lay the larger foundation for these markets to push on up into their measured move projected targets, 3,175 on the S&P 500. Now, when I show you this on the NASDAQ as well, let me just bring down the target into focus for you, 8,900. I still think we are going to hit this prior to a larger intermediate correction. And as such, whenever we see these pullbacks, we're still looking at these as a buying opportunity. Again, what we've done is the difference between Friday of 2 weeks ago being the 22nd of November. Also, Monday's candlestick over here on the 25th, we were left with an open window. We saw a 3-day continuation, including the original breakout candlestick. What we've done is that on Friday and during today's session, again, we've seen the pullback. If I can bring this back into clearer focus for you, if I can push the number 1 key on my screen and then readjust it on my template here, you can see that, yes, we've pushed on down into the open window, and you can say that we have, pretty much more or less closed this window. It doesn't really look like we've completely done it. If you pay attention to the high of this candlestick here, you can see it's 8,535. If you pay attention to the low over here, it's 8,540. So my best calculations, working with the data that I have at the moment, is that yes, the window is still here. It's by 5 points, but essentially that window has closed itself, right? I mean, you're talking about splitting hairs at the moment when it comes to closing this window. The good news is that we're already starting to see a reaction off from the open window on the NASDAQ, and we're also obviously seeing that on the S&P 500 at the moment with this lower wick as well. So again, don't be concerned. Don't feel as though the sky is falling. Push those sort of bearish thoughts to the side. We could be pretty much, I wouldn't say necessarily to the extremes of this very short-term minor level sell-off, but you should be expecting these markets to essentially hold just below the gap if we do see it definitively close. And as such, as the ADX resets and pulls back into these rising exponential moving averages again, i.e. most likely the 20 exponential moving average, you should be paying attention for this holding, acting as that rising area of support, which should push us on back on up to these projected targets of the measured move, that being that of the symmetrical triangle that we've been speaking about during its setup, especially during and prior to the breakout in the month of October. And this is giving us that sort of projected target of 8,900. When we get up into these two targets on the S&P 500 and the NASDAQ, that's going to be a great template to essentially close out of a bunch of these open positions that we have in our top 12 individual trade list. We're clearly not there yet. And as such, if you just do the maths really quickly, if you want to work with me, to me, it looks like we've got about 323 points, 323.2, based off this current price that I'm looking at 3,576.8 to get up to 8,900, just quickly looking at the numbers here. So again, a little bit of opportunity given the pullback today, but do not be worried, do not be scared, and don't let any sort of fear or panic sort of sweep into your judgment at the moment. This is very natural. Again, it's the first time whereby we've seen this type of sell-off. You have to pretty much go back again, to repeat myself, the 2nd of October. If not, you have to go back to the 8th of October over here. And again, we're still holding up firmly above, right, as a whole, the exponential moving average, and we're still sort of trending in that bullish direction, even considering the pullback that we've seen during today's session as at Monday. So again, as we move deeper into the month of December, volume is going to continue to trickle out of the market. This is the seasonal sort of volume adjustment as people sort of switch off from the market, so be mindful of that. Technical analysis, it's still obviously applicable. It still works, but as such, you're going to see lower volume as we move closer and closer and closer to Christmas, and also into the transition of the 2020 calendar year as well, or into the 2020 calendar year as well. All right, so on that note, everyone, I'm going to say farewell to you. Okay, I hope that's sort of cleared up any potential questions that you may have had about this sort of sudden bout of volatility. It is somewhat expected, it is normal, but do not think for a moment that it's something larger than just a routine sort of run-of-the-mill ebb and flow pullback to close an open window and to retest essentially these rising exponential moving averages as the ADX resets back down to its resting pattern prior to that final push up to this projected measured move of 3,175. All right, if you have any questions outside of that, email me, success@pivotpoint-trading.com. Otherwise, I will see you again, most likely anyway, tomorrow, depending what the candlestick is, with another market recap. We'll also throw in some of the stock recaps as well. All the best. It's James signing off on behalf of Pivot Point Trading. Farewell.